let's talk about the mammoth lenders. We're talking about ICBC, China Construction Bank. They're leading a surge in profit amongst Chinese lenders amidst the fastest economic growth in 3 years. But still, we have investors cautious here. And Paul, looks like they're still worried about their capital ratios after all that lending that poured out last year.
All that lending, what happens to that lending? Basically, what you've got is this government stimulus leading, as you say, to impressive economic growth. That meant a lot of new loans. Couple of problems here. One is when you make a lot of new loans, you run down your capital, and not all those loans will be repaid. Both ICBC and China Construction Bank boosting their provision loan loss coverage to 180% in the case of ICBC. That's well above the government's 150% limit. Let's take a look at those profit numbers. For ICBC, up 18% first quarter profit, but their capital adequacy dropped. CCB profit up 34%. Again, capital adequacy down. And earlier this week, Bank of China profit up 41%. You guessed it, capital adequacy down. They're all around about 11 to 12%. Only just within the limits set by the government. And Mark Mobius, investor we spoke to yesterday, said, be wary of Chinese banks.
You have to be very careful with the Chinese banks, and it's very important to remember that they are now raising more capital, which is a sign that they're getting ready for higher non-performing loans. But the Chinese market is different than, let's say, the Thai or the Brazilian. Brazilian banks, for example, are doing very well, and we think will continue to do well.
So buy banks, but not Chinese ones, says Mobius. Take a look at what investors think about that. They agree clearly. Bank shares down year to date. Bank of China down 5%, CCB 6%, ICBC down 11% year to date. So investors a little bit worried about dilution as those banks come to market, raise more funds.
Should try to raise more funds. That's why we'll be watching to see if those shares actually drag down the rest of the market today.